new tax year is just around the corner, and start of a new tax year is a very good time to set up targets for your business's financial performance. Here are my top 5 tips that will help you in setting up those targets and thriving through this new tax year. Number 1, improve your cash flow. Do you know 82% of businesses that fail have some sort of underlying cash flow problem? So you need to make sure that your business has sufficient availability of cash at all times. Number 2, claim all your expenses. Having an understanding of which business expenses are allowable enables you to claim them through your business, which reduces your profit and takes your tax bill down, ultimately giving you more cash to spend on growth of your business. Number 3, improve your tax efficiencies. Every year, the government releases a new tax policy which has changes to tax rates and stuff. So, for example, this year, the corporation tax rate has gone up to 25% for businesses that make more than 250,000 in profits, and dividend tax rates have gone up as well, so on and so forth. So being tax efficient means that you use the most tax efficient combination of salary, dividends, and other benefits to take money out of your business when you pay yourself. Number 4, get ahead of tax deadlines. So what most businesses do is that they ensure that their tax returns are prepared and submitted, their accounts are prepared and submitted by the deadline. But the better way of doing it is that you look at them throughout the year. So you're not looking at your numbers just at the time of the deadline of submitting your tax return, but you should be looking at your numbers monthly, if not definitely quarterly, because that will give you so much useful information throughout the year that you will be able to utilize and make better informed decisions for your business. It will prevent you from getting surprised at the end of the year when you look at a big tax bill, because you won't be surprised. You will know throughout the year what is your expected tax bill, and you can keep putting that money on a side. You will be able to forecast your financial targets, and you compare your current financial performance to them targets and make moves to achieve that. And because you will be looking at constantly at your information, your financial information, you will be able to mitigate so many risks and problems before they even arise. So definitely make this a habit of looking at your numbers regularly, and even when the deadline is close, don't just wait for the deadline and then submit the tax returns. Once that period is over, analyze your numbers, prepare your tax returns, and submit them ahead of the deadline once that period is over, because that will give you sufficient time window to make sure that you are including everything and you're not missing out on any opportunities. And even if you have missed anything, you will have sufficient time to include it. Number 5, consult an accounting professional. An accountant can help you prepare and submit your tax returns. Well, they can literally do it for you. They can keep your books in a very good shape. They can give you strategic and financial advice. They can answer any of your questions, remove your concerns, and they can deal with HMRC on your behalf. So definitely consult an accounting professional if you're not clear on anything.